Hey, this is Chris from StockSpot. Now, when I chat to different people in the finance industry and particularly fund managers and talk to them about the benefits of indexing and tracking an ETF rather than picking stocks, a lot of them nowadays actually agree when it comes to large companies, investing in the ASX 200 or investing into global large companies. But the constant pushback I get is around small caps. Most fund managers still seem to think that small cap companies are much easier to pick winners in and that fund managers who are buying and selling small cap stocks do better than the index. So in this video, I want to share the research that I've recently done looking at all of the different fund managers tracking small cap shares and comparing it to a simple ETF tracking the small cap index. And what I found looking at 150 different funds, all available for anyone to find and see on the Morningstar website that track the small ordinaries in Australia, is that only 40% of them beat the very simple small cap ETF over the last 5 years. So what does this mean? Well, 40% actually relative to other categories isn't that bad. When it comes to Australian shares, only 10% beat the index. And when it comes to global shares, only 2% beat the index. So it is true that more small cap fund managers are beating the index, but still it's less than 50%. So on average, people who are giving their money to a small cap fund manager are doing worse than people simply plonking their money into a low cost ETF that's investing in all of the small cap companies listed on the market. And a big reason for this is fees. Small cap fund managers tend to charge higher fees than other funds. And so even though they might be able to pick some winners and generate some alpha or some excess return, a lot of that is eaten away in their own costs and very little is left over for the end investor. So in my view, and certainly what we recommend to StockSpot clients, is if you do want small cap exposure, you don't need to waste your time picking fund managers or trying to pick the next winner in terms of stocks. Simply invest in the entire small cap index and you're going to get the winners that are going to drive returns and keep your costs low, which is really important over the long run. And we've found over the last 5 years at least, comparing the small cap ETF that we recommend, which is the code is VSO, versus the average of all of the fund managers, is that you would have been about $3,000 better off if you'd invested $100,000 5 years ago in the ETF rather than the managed funds. And that's why we continue to recommend, even in small caps, ETFs rather than picking fund managers.